Welcome to a new journey towards financial freedom. Today's topic is how to get perfect 850 credit score for free. Let's dive straight into the world of credit scores. You can think of a credit score as a financial report card, but instead of grades, you're given a score that ranges from 300 to 850. It's a 3-digit summary of your credit health, and it's used by lenders to assess how much of a risk you are when it comes to borrowing money. The higher your score, the better your chances of getting approved for loans with favorable interest rates. And yes, you guessed it, the perfect score is 850. That's the pinnacle of creditworthiness. The goal we're aiming for. So, ready to boost your score to 850? Stay tuned. Before we delve into boosting your credit score, understanding your credit report is crucial. So let's begin with what exactly a credit report is. In simple terms, a credit report is a comprehensive record of your credit history. It's like the report card you used to get in school, but this one grades your financial behavior. Now you might be wondering, where can I get my credit report? Great news, you can get it for free. Yes, you heard right, for free. Every 12 months, you are entitled to one free credit report from each of the 3 major credit bureaus, namely Equifax, Experian, and TransUnion. Alright, you've got your report. Now how do you read it? It can seem like a jumble of numbers and terms at first, but let me break it down for you. Your credit report is divided into 4 main sections: personal information, credit history, public records, and inquiries. The personal information section is pretty self-explanatory. It includes your name, address, social security number, and employment information. Nothing too complicated there. The credit history section, on the other hand, is the meat of the report. This section contains the details of your credit accounts, including when they were opened, the type of account, your credit limit or loan amount, account balance, and payment history. It's a detailed report of how you've managed your credit over time. The public records section contains information about any major financial events like bankruptcies or tax liens. Needless to say, you want to avoid having anything listed here. And finally, the inquiries section lists everyone who has accessed your credit report in the past 2 years. This includes both soft inquiries, like when you check your own report, and hard inquiries, which occur when a lender or creditor checks your report. Understanding these sections and what they represent is the first step to mastering your credit score. Remember, knowledge is power. Now that you understand credit reports, let's move on to improving your credit score. Ever wondered what factors influence your credit score? Let's break it down. First off, we have payment history, which is essentially a record of whether you've paid your bills on time. Think of it like a report card from your school days, only instead of grades, the score is based on your reliability in making payments. If you consistently pay bills late, your score may drop, so it's crucial to pay your bills on time. Next up, we have credit utilization. This refers to the percentage of your available credit that you're using. If you have a credit card with a $10,000 limit, and you've used up $9,000, that's a 90% utilization rate. High utilization rates might suggest financial stress, leading to a lower score. Ideally, you want to keep this rate below 30%. The third factor is the length of your credit history. This is calculated from the moment you open your first credit account. The longer your history, the better your score is likely to be. It's like a long-term relationship. The more history you have, the more trust you've built. Fourth on the list is new credit. This refers to the number of new credit accounts you've opened or applied for recently. Opening many new accounts in a short period can be a red flag to lenders, as it may indicate financial trouble. So it's best to apply for new credit sparingly. Finally, we have credit mix. This is the diversity of your credit accounts, including credit cards, student loans, mortgages, and auto loans. A varied mix can show lenders that you're capable of managing different types of credit responsibly. Understanding these factors is the first step towards a perfect score. Let's see how you can improve in each area. With the right strategies, achieving an 850 credit score is within your reach. Let's delve into some effective techniques that can help you inch closer to that perfect score. First up, timely payments. This may sound like a no-brainer, but late payments can have a substantial negative impact on your credit score. For instance, let's say you have a credit card bill due on the 15th of every month. If you consistently pay this bill on the 14th, you're not only avoiding late fees but also showing creditors that you're reliable, which can give your score a healthy boost. Next, we have low credit utilization. Credit utilization refers to the amount of credit you're using compared to your total available credit. For example, if you have a credit limit of $5,000 and you've used $2,000, your credit utilization rate is 40%. It's generally advised to keep this rate below 30%. This shows lenders that you're not overly reliant on credit, signaling responsible credit use. Maintaining old accounts is another important strategy. It might seem logical to close an old credit card account that you no longer use, but doing so can actually harm your credit score. This is because the length of your credit history contributes to your credit score. So, keeping that old credit card account open, even if you're not using it, can help lengthen your credit history and improve your score. Limiting new credit is our fourth strategy. Every time you apply for new credit, a hard inquiry is made, which can lower your score. So, while that new store card might be tempting, consider if it's worth the potential hit to your credit score. Last but certainly not least is diversifying credit types. Having a mix of credit types like a mortgage, car loan, and credit card shows lenders that you can manage different types of credit responsibly. Think of it like a balanced diet. Just as you wouldn't eat only one type of food, you shouldn't rely on just one type of credit. By following these strategies, you'll be on your way to a perfect score. But wait, there's more. While working towards a perfect score, beware of common mistakes that could derail your progress. Let's shine a light on some of these pitfalls. First up, closing old accounts. It may seem like a good idea to simplify your finances, but this could backfire. Why, you ask? Well, length of credit history is a factor in your credit score. When you close an old account, you shorten that history, which could potentially lower your score. It's like cutting off a slice of your past that's been working in your favor. Next, applying for new credit frequently. Each time you apply for credit, a hard inquiry is made on your credit report. This can cause a small, temporary dip in your score. Now imagine if you're applying left and right, those little dips can add up. It's like a bee sting, one might not bother you, but a swarm? That's going to hurt. Lastly, maxing out your credit cards. Credit utilization, which is the percentage of your available credit that you're using, plays a significant role in your credit score. When you max out your cards, your credit utilization shoots up and your score, well, it plunges. It's like adding too much weight to a boat. Sooner or later, it's going to sink. So, what's the takeaway here? Keep those old accounts open, apply for new credit sparingly, and try not to max out your credit cards. By avoiding these common mistakes, you're not just maintaining your credit score, you're setting the stage for it to soar. Avoid these pitfalls, and you're one step closer to a perfect credit score. But remember, patience is key. Achieving a perfect 850 credit score is not a sprint, but a marathon. It's a journey that requires understanding your credit reports, recognizing the factors that influence your score, and applying strategic methods to improve it. Remember, it's about cultivating good habits that will serve you well in the long run. We've unraveled the complexities of credit scores today, from the intricacies of credit reports to the different factors that can make or break your score. We've also discussed powerful strategies to boost your score and common pitfalls to sidestep. The road to 850 might seem daunting, but with the right knowledge and tools, it's absolutely achievable. It's time to put this knowledge into practice. Start by reviewing your credit reports and identifying areas for improvement. Then, implement the strategies we've discussed and consistently avoid those common mistakes that can drag down your score. So, what's your current credit score and what steps will you take to improve it? Share your thoughts in the comments below. Don't forget to subscribe for more financial insights.